Jeff Irvin is the CEO of IMAC Holdings on the NASDAQ, ticker IMAC. Jeff, good afternoon.
How are you doing, Spencer? Thanks for having me today.
Doing fantastic. I see the presentation up on the screen. That's my cue to see my way out of here and let you do your thing.
Fantastic. Well, again, thanks for the introduction and welcome to the IMAC Holdings Benzinga presentation for the spring of 2021. Obviously, we have our, let's see here. There we go. We got our safe harbor statements here. Pretty standard information, but we will be reflecting on potentially some forward-looking statements in this presentation. So to start, I want to give you a quick overview of where we are as a company. IMAC Holdings has been public for over 28 months now. We recently completed a capital raise. So we're sitting on $15.6 million of cash as of March 31st, with only $4.8 million of accounts payable, accrued expenses, and notes payable, again, on that same date. We have over 25 million shares outstanding, just over, and that's the May 12th date. IMAC Holdings is broken into 3 different divisions. And so what you'll see here is IMAC Regeneration Centers is the core business. That's where we generate most of our revenue today. Clinical trial, that is an investigator-initiated trial that's run, is a second division. And then the third division is one that we've just recently launched called the Backspace. And again, I'm excited about touching on that because there's some great developments on that side of the business. Now, first, I'll start with the core business. IMAC Regeneration Centers was founded in the original IMAC Regeneration Center was founded in 2000, August 2000, and has a long history of providing non-opioid, non-surgical medical services for individuals that are faced with knee replacements or hip replacements or spinal fusion surgeries. And so in 2015, I was co-founder of the holding company and launched IMAC Holdings with the purpose of replicating this model to expand to markets that ultimately where we saw a tremendous underserved population related to these non-surgical movement challenges and disease states that exist. And so today, we have 16 outpatient clinics, 3 in Illinois, 3 in Kentucky, 6 in Missouri, 1 in Tennessee, and 3 in Florida. Our clinics are run by medical doctors, physician assistants, and nurse practitioners, and they work alongside physical medicine doctors like physical therapists and chiropractors. The revenue mix for us is generated 65% through medical services, 31% through physical therapy, and 4% through chiropractic. Again, we see a lot of patients in pain. Roughly 80% of the patients come to us in pain, but we have never prescribed an opioid in our history. So we are a non-opioid pain clinic, if you will. Real excited about what we've been able to do as a company and growing to these 16 locations. And that growth has really been grown through acquisition. Our clinic growth through acquisition has really sprung up from the original 7 locations that we created de novo through that Kentucky and Missouri landscape. So now we actually have a presence in 5 states. And the presence that we generate for these IMAC Regeneration Centers is complemented by brand ambassadors of a sports fame to bring early adoption and awareness in those communities for the sports medicine services that we deliver for those communities. So, for example, Ozzie Smith in St. Louis and Springfield, Missouri is the namesake of the IMAC Regeneration Centers in those towns. Mike Dick is the namesake in Chicago, for example. So when we use that name, it really does help bring early adoption to the services that we're delivering and awareness that there is an alternative to surgery out there. If you add up the cost of every surgery performed in the United States, number 1 is spinal fusion, number 2 is knee replacement, number 3 is hip replacement. And a lot of people don't realize that just because your surgeon recommends surgery, they don't realize there's an alternative to surgery out there. And so what we deliver is minimally invasive to non-invasive services to try to prevent that surgery from ever happening so that you can live your life to the fullest degree and optimal function. As part of this recent capital raise that we did, we set aside $5 million to continue our acquisitive nature and acquisitive growth while the market is ultimately showing depressed valuations based on historical multiples for medical practices. And so 2 of our recent acquisitions, for example, in the first quarter, were in Tampa and Orlando. Our Tampa acquisition was at 1.25 times trailing 12 months cash flow, and our Orlando acquisition was actually at 1.4 times trailing 12 months cash flow. So we're seeing tremendous valuations right now, and it's just the way the market is. And there's not a lot of competition for these clinics out there. So we like finding these clinics, preferably chiropractic clinics, so that have an existing patient base already built into it. And we can go in and acquire these practices under 2 times cash flow, and then add in additional services to that existing patient base without disrupting the existing patient base. So the medical services and physical therapy are simply layered on as additional service offerings to that existing patient base. So with $5 million set aside, we've been building a robust pipeline of targets for us to put that money to work in the very near future and continue our expansion through acquisition. We really like that Florida marketplace. And of course, we have not saturated any of the markets where we currently operate. So further build out in those markets would certainly be an efficient use of capital as well. So we're excited about where we are on that side of things. As far as a clinical trial is concerned, again, it's an investigator-initiated trial. Our medical doctors and our facilities have been approved to deliver this clinical trial. It is a stem cell-related product that we got an IND on, and ultimately, by conducting that trial within our 4 walls, it has reduced the cost of that trial tremendously. We're using those stem cells for bradykinesia due to Parkinson's disease. I mentioned we're a movement clinic. As a movement clinic, roughly 95% of our revenue comes from orthopedic services, but 5% is coming from neurodeficit disorders like Parkinson's. And so we see this as a great opportunity for us to expand scientific evidence around the use of stem cells for neurodeficit disorders. We completed the first cohort of our clinical trial in February 26th, and anticipate that the 15-patient trial will be completed in the 3rd quarter this year. Now, much of the excitement around IMAC right now is around this retail chiropractic business that we just launched. On the chiropractic side, again, 4% of our revenue to date is chiropractic in nature, but the chiropractic industry is highly fragmented. It is an industry that is large and growing. Roughly 35 million U.S. adults seek chiropractic care each year. And when you look at the one public company that's out there that has really capitalized on this and gained a tremendous amount of awareness to the industry, it's The Joint, a NASDAQ-listed company under JYNT. Had a tremendous run in the stock and currently trade at 11 times sales and 50 times earnings at over a $700 million market cap. Now, as big as The Joint is as a franchise, they only represent roughly 1% of the industry. And so we think that the Backspace, which is the name of our retail chiropractic clinic, is certainly a concept that, with a different position to The Joint, would allow both companies to succeed in a great way within this industry. But we certainly see firsthand the amount of chronic spine conditions in our clinics, and feel that expanding our reach through this retail chiropractic concept will feed our core business and capitalize on the amount of spending that is going towards spinal care and wellness each and every year. And so I mentioned that we just recently launched the Backspace. It's something that came to fruition after a significant amount of effort and diligence. But as part of this recent capital funding, we set aside $4 million to launch this brand in new storefronts for the Backspace. We actually are launching this as a 10-store test market with our Fortune 500 partner. And our first store actually opened this month. So we are actively seeing customers in the store and have had a very nice response to our initial opening. This 10-store test market is a way for us to ultimately iron out the kinks in our operation before we go to a larger scale development and launch of many more stores. The $4 million that we set aside as part of the funding will more than satisfy the 10-store test market. So we actually think that there's an opportunity for us to grow beyond that 10-store test market very easily with the funding that's already in place. But we are going to measure the success of the early launch of this test market before we commit any more capital to the launch beyond that 10-store test. The 10-store test market will actually take place in 2 different markets. So the first market has been announced because of our first store being open in Murfreesboro, Tennessee. So we will be testing within the Nashville market, and we have not announced where that second test market will be, but it is in a large metropolitan area where IMAC clinics are available. Similar to the joint, will we be offering cash-based services? Our service will be at $25 for each service, and we'll actually be offering 3 different services to our consumers. We'll be offering a manual adjustment, so that's a chiropractic adjustment delivered by a chiropractor, percussion therapy, which is also delivered by a chiropractor, and then muscle stimulation through a device that can be attached by a non-medical provider as well. The muscle stimulation device is something that we see as a tremendous value to this partnership, primarily because it is a remote operating product where we could attach that muscle stimulation device to an individual and then control that via remote control, while an individual could ultimately walk about the store and conduct their shopping while this muscle stimulation device is attached to them. So we're excited about what the opportunity is for that, given that that's a unique service offering in this industry. You can see an example of some of the branding that is in place for the Backspace. It's something that we've been working on for several months now, but we've come to full circle on this, and not just went through the focus groups to develop the name, but also develop the brand strategy and marketing that goes along with this. And so amongst that, not only will we be offering an individual service for $25 each, but for an individual that wants to take advantage of 4 treatments per month, they can sign up for a membership at $65 each month. We will be offering a discount plan for the employees of our partner. As part of our partnership, these individuals will receive a 30% discount on that monthly membership. And as you can imagine, being on your feet all day, as most of these employees are, they may find that back pain creeps into their everyday lifestyle. And so having this available on site for those can certainly a benefit to that employer and the employees alike. So we're excited about that. IMAC leadership here is in place as far as our board of directors. We have a fantastic board to support the executive operators. I myself, the CEO, and Matt Wallace, the COO, who's founder of the IMAC Regeneration Centers. We're supported by 3 independent directors, Carrie Sukoff, who has a tremendous amount of experience with public companies and knowledge of legal and banking side of things. Mike Pruitt, as former director of Hooters of America, has a tremendous knowledge of franchising and consumer-focused branding. And then, of course, Maurice Evans, our 3rd independent director, who was a professional basketball player for a significant amount of time and has a tremendous network and marketing experience that he brings to the table for IMAC Holdings. So in summary, when you look at IMAC Holdings as a company, again, the key thing to remember is that we're really 3 different divisions that complement each other. The core business is ultimately in place to satisfy the growing demand for orthopedic treatments and care in the United States. We're positioned to take advantage of the growing baby boomer population, which is turning 65 at a rate of 10,000 people per day, which is expected to continue for another 8 years. So we do not see orthopedic demand slowing down by any stretch. When you look at our proprietary developments on the stem cell side with our clinical trial, it's a great complement to the services that we already offer, and a great way for us to capitalize on asset development at a fraction of the cost for those that are in the development space. And then, of course, finally, the Backspace and the launch of this retail chiropractic center serves as a great access point for us to not only treat patients where they shop, but also if those individuals wish to use their insurance, or if they find that they've been part of an injury in a work setting, they could easily be referred back to the local IMAC center and receive medical intervention from a medical doctor that can care for them beyond what care could be provided by that chiropractor in that retail setting. So with that, I appreciate you listening to the presentation, and I open the floor to Q&A.
Yeah, thanks a lot, Jeff. Quick question here. I'm wondering if you could speak a little bit to the impact that COVID has or could have. Obviously, we're theoretically coming out of this now,
Right.
but there's been this transition to telemedicine, which doesn't really work with chiropractors. So
Sure.
I'm wondering if you could speak to that a little bit.
Yeah, so we were heavily impacted by COVID in 2020. Our revenue was actually down over 20% from 19 to 20, and we still felt the effects of that in our first quarter of 2021. Now, I think that we're seeing fewer and fewer effects of COVID on our everyday business, with the exception of the impact that COVID had on valuations for targets that we're looking at. Again, those compressed multiples that we're seeing compared to historical averages are really creating an opportunity for us to expand our footprint with a pretty efficient use of capital on our acquisition side of things. So while we still felt the effects of COVID and used telemedicine to some degree to maintain touch points with our existing consumers, we're finding that the consumers now are getting out of the house more and more. And so we're certainly hopeful that we'll see a return to normal as it relates to our revenue streams going forward. Now that we're seeing fewer and fewer effects of COVID in our centers.
And then the question that I always like to ask, because it's very simple, but from an investor's standpoint, what is the company's biggest catalyst in the next 12 months?
Well, I think that our partnership with our Fortune 500 partner is one that a lot of people see as a great catalyst. I think that's certainly pretty significant. There was a significant diligence period that went into that, and we were successful at earning our way through that diligence and truly creating a partnership with this company. And many people say, "Why aren't you saying the word of that partner?" And part of that is because our partnership is so significant that there are actually confidentiality provisions within our agreement that don't allow us to use their name until we've had a grand opening of our first store. And so while our first store is open for business, we have not yet had our grand opening, which should happen in a few weeks. So we anticipate that partnership will certainly be able to springboard beyond the 10-store test market if we're able to hit our metrics and performance metrics early in that process. So I think that's certainly one driving force. The core business just returning to 2019 numbers would be another motivating force, especially if you add on a few acquisitions to that. We could certainly see revenue numbers exceed where we performed 2 years ago.
Well, since you mentioned the acquisition thing, here's a question from our TJ family. Does the launch of Backspace make you less likely to make another acquisition this quarter or next quarter?
No, we have a robust pipeline, and you should anticipate that we will be allocating a portion of that $5 million that I referenced, setting aside for acquisitions on the clinic side, will be put to use. So we've actually set aside more money for acquisitions than we did for the Backspace early in this process on the Backspace. Again, we don't anticipate using all $4 million, but the $5 million that we've set aside for acquisitions could certainly be put to use today if we wanted to. There's no reason for us to push that envelope, but our core business still remains the IMAC regeneration centers at this time, and so we'll put that money to work very quickly.
All right, Jeff Irvin is the CEO of IMAC Holdings. You can see the ticker there, IMAC. There's the URL as well. Jeff, thanks a lot I learned a lot. Thanks a lot for stopping by.
Thank you so much. Appreciate you having me.